Hi, and the markets were returned to normalcy today as Brent crude remained stable at the 77, dollar index stable at 101, the in US interest rate stable at 4.56, Indian 10-year stable at 6.76. Rupee was strong by about 18 paise at 95.38. So overall, geopolitically, it was a return to stability. Yesterday's shock, which took the Brent to 78, stabilized there. So I think to summarize it, the global geopolitical scenario, the market, especially Brent crude, I think has called the geopolitical bluff. And there's no further, fear of the war escalating. And yes, it's not yet eased down Brent crude, but it's stabilized. That itself is a good signal, right? And when it comes to the Indian markets, well, they did reflect this bounce back, though in the last half an hour or 45 minutes, there was some profit booking in the large cap space, which you will see as to why that happened. But effectively, if you look at it, the FIIs was selling 500 crores today. So back to their selling. But like we have observed, these are not magnificently large numbers, right? Is there a 500 crore sales or a 500 crore purchase within a normal band? So I can't read anything into the sales nor into the redemption. DIs were back to their buying days at about 2,000 crores. I think they bought today, 2,057 crores to be right? But the rally in the market was driven by NIDI today. The NIDI who panicked yesterday bounced back with double strength. What's the evidence in front? Well, first, the micro cap, small cap indices were up 2%, like they were down 2% yesterday. They were up 2% today, and mid cap also did a healthy 1.4%. So only large cap, which was about 34 basis points positive, but that was because of a last hour selling. And if you look at the FIS selling, I suspect that it was due to the FIS booking profits by the end of the day, right? The second thing supporting my NIDI comeback theory is the advanced decline ratio, which jumped humongously with 2,000 stocks advancing and about 700 stocks only declining. So 2,200 is to 700 is the number. So strong across the board buying. And the third thing supporting the NIDI theory is the fact that the top performing sectors today were the risk and the cyclical rate sensitive sectors. Like realty was the standout performer with 3.5%, then consumer durable with 1.7%, PSU banks with 1.6%, and then there was some safety buying in the healthcare and FMCG, which were up roughly about 0.7 to 1%. Private banks also showed a positive. And the other thing showing there is that there was no very strong negative. In fact, the three sectors which were negative were IT with 30 basis points negative, auto with 20 basis points negative. So they were all very much in the space of, you can even call them flat. So this return to the risk, right, again is something that typically the NIDI, I would have believed that yesterday they panicked and sold, and with the correction they felt emboldened to come back. And like I said, Brent crude is probably that one trigger which the domestic people keep tracking as far as India is concerned, and that did move negatively today, right? So all in all, I think a happy day for the markets in terms of the fact that there was a resilience shown by the Indian market. Now, I just wanted to add one more factor here today, which is the post-market result of TCS. We've been eagerly waiting for the TCS results, and so I thought that I will give you a hint. Remember, whatever I say about TCS is nothing to do with the stock recommendation buy or sell, right? Do not treat this as any investment advice, right? So TCS results were a relief. They were largely in line with the market expectation. Yes, quarter on quarter, there was a drop because they had a one-time settlement on a case which again went against them. So if you take out that, right, operating profit margins actually improved year-on-year basis, right, by 80 basis points. Q on Q, as I said, for the one-time effect was there. And if you look at their basic lines of business, right, BFSI, banking, financial services, and insurance, right, which is 32% of their revenue, posted a 1.6% quarter-on-quarter growth, which is quite reasonable given the geopolitical uncertainty. Where the uncertainty hit was in that business. The consumers who are buying, consumer businesses which are buying IT services, they fell sharply 4% quarter on quarter, right? And as far as geography is concerned, India market for TCS showed a very strong growth, though the US market was very flat, as I said, because of both the consumer and the BFSI segments being very marginal, right? But total contract volume, which is the key number to track there, is about $9.5 billion, which is good. But what also is something which is pleasing is the focus on AI. They added 9,500 employees this quarter, which I suspect would be largely AI related hiring, because after many quarters of declining, they have added employees, right? That's one signal, good signal. Second is that they have announced a lot of AI projects, and they have a $2.6 billion AI project run rate now developing. So clearly, this elephant is beginning to move towards AI, as you know, that's a very good sign for that. Third is that they've forged a lot of strategic partnerships with LLM providers like Anthropic, Mistral AI, and Claude. They have got licensing for 50,000 employees. So clearly, they're planning to use these licenses to go and pitch for AI-related projects. So I think that's a very good positive to come out of this thing. That apart, they don't give guidance, but what they indicated was that while the basic BFSI regular businesses, right, are definitely challenged by the geopolitical uncertainty, they indicated that there are a lot of businesses which are not affected, which are like cyber security, for example, cloud architecture, right, AI optimization. So these are all not dependent on the geopolitical scenario, but more in terms of those customers investing for the future in terms of cybersecurity, AI, and all that. And that they said there is a resilience. So I would summarize it by saying that the bellwether TCS results, basically the market, I think, should ease a sigh of relief, and we have to now wait for the other companies to see whether they reinforce this kind of less of disappointment. May not be too much of positivity, but less of disappointment. Like I said, again, this is not a recommendation to buy or sell the TCS stock. There is no stock related view at all. Since it's the bellwether for the IT sector, it tells you that compared to what Accenture came and dropped its revenue guidance and gave a shock to the whole software industry from the US, this bellwether hasn't done. They haven't given a shock. They've broadly not provided a shock, though honestly, there's no great growth number yet visible. But given the fears that have been built into the whole sector, I think this is a bit of an easing in terms of the near-term outlook. Right? Hope you enjoyed this review. Look forward tomorrow.